Trading Forex, will never need no record deal. Making my own investment, market printing me money.
Peace, guys. Welcome back to ZENSFXHUB, where fundamentals are simplified. And before we get into the charts, I want to go over the fundamentals I'm looking at this week. We do got some, speakers for the U.S. coming out. Not something that I'm really going to pay attention to, but sometime throughout tomorrow, I will, just take a glance at it and see some things that they say and see if we can get some type of hint or direction on what the Fed is going to continue to do for the rest of the year as far as rate cuts and stuff like that, okay? What's mainly important for me is the ZEW economic sentiment that's coming out. If you don't know what that is, go over to my YouTube channel and go to the fundamentals playlist, because and then click on economic surveys. This is where I talk about, things like, ZEW economic sentiment, or the University of Michigan, that's for the US, stuff like that. That's where I go over these type of articles and explain what they are. So this is what I'm paying attention to. Then CPI is coming out for Canada, which is going to be huge. Then we also have the interest rate decision for the Eurozone. And the reason why this is going to be super important, right? Because if I click on this folder, as you can see, right, interest rates has been coming down. They've been doing rate cuts, so they've been getting interest rates has been lowering, right? So we back in March it was at 4.50%, and now in present time we at 3.65%, right? So as you can see, the euro, the ECB has been doing rate cuts, right? But what's very interesting about this, right? Because if you don't know, and again, come over to my fundamentals playlist, and I talk about inflation and interest rates, right? So if you don't know, a good inflation percentage is 2%. That means the economy is stable, businesses are making money, people are able to afford to buy things, they're able to afford to take out loans and stuff like that, right? So if we go over to Trading Economics, and this is my favorite website because it literally tells you everything you need to know about any country that you're trading, right? So let's go over to Euro area. So as you can see, right, inflation is actually below the 2% mark, right? It went from 2.2% to 1.8%. So they're actually lower than the 2% mark. So it will be very interesting to see on whether or not ECB decides to do a rate hike or make some type of movement to make that 1.8% go up to that 2% level. So this is why I'm I'm going to be locked in on this right here. And then we also have retail sales, unemployment claims coming out for the US, along with a press conference from the chairman of the Eurozone bank and stuff like that. Okay, so that's the fundamentals I'm looking at for this week, and let's go ahead and hop on the charts. Okay, now I am a swing trader, so I do mark up my charts. I do mark up my charts on the monthly and the weekly and the daily, and I enter my trades on a 4-hour and a 2-hour, right? But sometimes I will look at the 3-month because and I said this multiple times, there are 4 quarters in 1 year. Every 3 months make up a quarter. So we are actually in the last quarter of the year. The October starts the first month of the fourth quarter. Okay, so we got October, November, December. Those are the last 3 months of the year. So we are in the fourth quarter, and as you can see, right, this is this month's, but this is how quarter 3 ended. Quarter 3 ended very bullish, right? So the reason why I wanted to look at it, show you guys this and tell you guys this, is because if you really look at the way EU has been trading, right, from a very big macro technical standpoint, we have been on an uptrend, right? Despite what we see on the lower time frame, we have been on an uptrend. Okay, now are we going to continue to go up? That is the question. That is what we're going to talk about and see. But I just the fact that the whole third quarter, we was trading up, and then this could possibly be some type of pullback for us to continue to go to the upside. So let's go ahead and dissect it more. Okay, we're gonna start from the weekly. If you watch my last previous market breakdown videos, I'm gonna go ahead and take this out. I said that even though we got this push above 110 level, we got the break above. I did enter on a buy because I was like, okay, if we get a pullback here, I'll take it and buy it up. So I did take 2 buys, I remember, and I, obviously they got my stop loss got hit. So I was like, okay, another area that I'm interested in to possibly buy is if it comes down to this level right here and see how it reacts here and see if it wants to continue to trade higher. Okay, so that's what I'm waiting for right now. The way the last week ended off, you see like a nice little rejection here, but again, if you look at the past, right, we broke out of here. People probably thought we was going to continue to go to the moon, and then it ended up coming back down and trading within this range. This could do the same exact thing, right? This could do the same exact thing because we got this low right here, then we got a higher low, right? So we are actually, trading at the level of this previous higher low that created this high, right? So this is why I marked up this green line right here, because we are at a nice little support level right here. So I'm very curious to see if we're gonna actually break below it and then continue to trade within this range, or whether we're gonna respect it, and then if we drop down to a daily time frame, could we possibly see some higher highs and higher lows, and then possibly get in. So this is what I'll be looking for as far as our entry, right? I'm gonna go to the 4 hour because I enter on the 4 hour or on the 2 hour, right? So if we can get some type of break above this level, this is what I'll be interested in buying. I'll go ahead and put a line here, right? I'll be interested in getting in for a buy right here, and then stop loss could possibly be somewhere like that, right? And then take profit would be this 112 level, right? And just to be, if I be aggressive, I can keep my stop loss low, or I can come ahead and put it a little bit right here like this. So a nice 4-to-1 risk to reward, not too bad. So I want to see if we can actually get a break above this 109 level before I go ahead and enter on this trade, because again, looking at it from a weekly perspective, this can easily just come back down and then just trade within this range and then consolidate, right? So that is what I'm looking for with EU, and I'm gonna give you guys a really in-depth market breakdown video for you guys, because you guys are really liking these videos. Like, I see the views on it. So it means you guys are really tapped in. So I'm give you guys some good information when it comes to UJ. And again, let's look at it from a macro standpoint. If you look at it from the 3 month, right, the third quarter of the year, right, same thing I explained with EU. The third quarter of the year, you can see it was bearish, right? It's just strong bearish candle, right? But to me, right, if you look at it from a macro standpoint, this is the furthest to go, but just looking at it from right here, we are in an uptrend, right? So this strong push to the downside could possibly be just some type of pullback before the continuation to the upside. As you can see, we already starting out the quarter bullish, right? This strong push to the downside could just easily been like a retest before the continuation back to the upside, right? And if you look at it from a monthly time frame, we are in an uptrend. We really are. If we would have got some type of break above here, because we got this low, then we got this higher low. If we would have got some type of break below here, this level right here, then I probably would have been like, okay, yes, we may be shifting gears and actually going lower, and trading lower and going on a downtrend. But looking at it from a macro standpoint, we are still in an uptrend on UJ. So I will possibly be looking for buys, honestly, because a few weeks ago I was looking for sales. I'm not gonna lie, but there's a couple of things too that I would like to mention before I even continue to break down UJ, EJ, and CJ, right? If I go ahead and go over to back to macro trading economics, right? Go to countries, go to Japan, right? There's some interesting things going on, right? We have GDP, we have we have GDP growing, right? So we went from negative 0.6% to 0.7%, right? So it's growing. We have unemployment rate going down. We have inflation rising, right? And then interest rates is still at 0.25%. And I say this to you guys enough. If you are a regular on this channel, you know high interest rates is good for foreign investors, right? So back in 2023, interest rates in Japan was negative 0.1%. We just got into the positive this year with the two rate hikes that they gave us back in March and in July. So even though, Japan, even though the Bank of Japan is trying to stimulate their economy, they're doing it at a very slow pace. And I'm going to break it down even a step further, right? If you come on Trader Economics, right, and I'm going to show you guys how to do it again. You go to countries, you pick on a country, right, and then you just go down and go to news. There were a couple of things that I was reading on here, but this is something that stood out to me, right? This right here. It says that, where was it? Okay, so Japan just got a new prime minister. I don't know how to say that, but it says that economic conditions may not warrant an additional rate hike. Okay, and if I wish I would have had this ready for you guys, but it was something. Where was it? Just bear with me, guys. I promise you it will be worth it. I promise you it will be worth it. Okay, yep, right here. So, right here, the new prime minister and his economy minister, I don't know how to say their name, advocated for caution before raising rates further given economic conditions, right? They do not want to stimulate Japan's economy so quickly that they pretty much defeat the purpose of what they're trying to do. The reason why they did the two rate hikes this year is because they're trying to stimulate their economy. They're trying to get it to move, right? For about 7 years or something like that. Japan has not had, like, inflation was at a standstill, interest rates was at a standstill. Nobody was getting raises at their jobs. Prices of things was not changing, right? So you see how in the U.S., if you're from the United States, 1 minute an apple will be $1.27, and then the next minute the apple will be $1.23, and then the next minute it will be $1.46. So that wasn't happening in Japan. They was literally at a standstill. Nobody was getting paid higher rate wages, but the price of things weren't moving either. So they're trying to stimulate and they're trying to grow their economy. They started to buy bonds. They did rate hikes, but they don't want to do it too fast. And then the new prime minister is like, you know what? With this right here, and this came out 6 days ago. He's like, you know what? Even though we're trying to grow the economy, we don't want to do it. So we're gonna be cautious about how we go about this next rate hike, right? Because when a country decides to do they decide to do rate hikes, that causes inflation to go up, and that causes interest rates to go up as well. So that kind of put them on the map to, okay, foreign investors seeing, okay, I could dump my money into this country because they're doing rate hikes by 50 basis points, by 25 basis points. So that means every time I put money into it, it's going to continue to grow. So this was 6 days ago. Fast forward 3 days ago, now they're kind of changing their tone, saying that they may not even do a rate hike. So right now, Japan is just, they're trying to just do the right thing by their economy by not stimulating it too fast, right? And another thing I would like to point out, if we go back to last week, right, we had where is it? Okay, the money stock, the M2 money stock in Japan. So pretty much what this tells us is, right, it tells us that this shows us how much money is stimulating within the economy. And the fact that it went from 1.5% and it dropped to 1.3%, this shows that the money in the economy is not stimulating as fast and is not growing as fast as they would like. You know what I'm saying? Like, even though, you know, they did rate hikes and they started to buy bonds, the economy is still not growing at a fast pace compared to a economy like the US, the Euro, Canada, right? So with this information, when you take this information and you compare it to a country, even though the US is doing rate cuts, which is a bearish thing, it still doesn't compare to what's going on with Japan, right? If we go to look at the United States, look at interest rates. Interest rates, even though it dropped from 5.50% to 5%, it's still, you still getting more money back with a 5% interest rate than a 0.25, right? And then if we compare it to Euro, interest rates is at 3.65%. And then when you compare that to Canada, and the reason why I'm using these, because these are the pairs that I trade, interest rates is at 4.25%. So when you compare that to a country that has 0.25%, you're still getting, even with the US doing rate cuts and the Euro doing rate cuts this year and fucking Canada doing a bunch of rate cuts this year, the interest rates is still higher than Japan's. So this is why when you look at it from a macro standpoint, when you look at it from a monthly, when you look at it from a daily, UJ is still on an uptrend. EJ, CJ is on an uptrend. So I know I just said a lot. And if you need to rewind, I apologize. And let me know if I need to break things down a little bit slower for you guys. But I just didn't want to make this video too long. But I also wanted to give you guys some great information. Okay? So moving forward with all this information that we got with Japan and what we got with the US and we got with the Euro and we got with Canada, I'm still looking for buys. The sales that I was in previously were short term. They were short lived, right? Because as you obviously can see, it just came down and these were my potential take profit levels as far as looking when I was looking for sales. But as you can see, it came close, but then shot all the way up. Okay, so what I will be looking for as far as entries, right? If we go ahead and drop to a daily time frame, I honestly felt like, you know, buying from here would have been great, but it's cool, okay? And I'm gonna go ahead and take these out because these are no longer relevant. So I'm gonna go ahead and delete these out off my charts, okay? So what I could possibly see, as far as getting in on another entry, if we can get, I would honestly wait because I feel like if I were to get in around here, my stop loss would be way too wide. Let's go to mark this up. And the reason why I'm marking this up right here because this is the last lower high that we had, okay? So that's why I am marking that up. Okay, so if we were to get a nice pullback here, then I will possibly put my stop loss below here at this higher low that we have here. Yeah, so go ahead and mark this up as well. Boom. Mark that up, and then I'll put it a little bit below. So I would like to see a pullback come down to this level and then a continuation to the upside. But as of right now, if it doesn't do that, right, if I don't get a pullback, then obviously I would just wait for it to just break above 151,500 level area. I would wait for it to break above here and then possibly get like a nice retest, or maybe it'll probably retest down to this level and then continue higher. So two things I'm looking at, two possible trades I'm looking at is a pullback here, continuation, or a break above, pullback here or a little bit lower, and then a continuation. And let me just throw a fib on it just to see how it looks. Yeah, I don't even think the fib is really going to really show me something. Okay, let's I'm not really fucking with this fib. Let me try to throw a fib on from a daily perspective and see. Okay, this is a little bit more decent. So yeah, kind of, and then it's crazy because it lines up. The line that I put, it lines up with the 38 and the 50% fib level. So yeah, could possibly get a pullback here, and then take profit will be actually right here at this level that I have marked up. So that could work. That could work. So something like this, boom, and then stop loss somewhere up here and stuff. So yeah, that could work. And if we don't get that again, if we don't end up getting this kind of trade right here, then I'll be looking for, you know, some type of pullback. I mean, a breakthrough and then a pullback, and then possibly get a trade like maybe like this, something like this. You know what I'm saying? So yeah, something like this. I'll possibly be looking for. So two different options. Just gotta wait to see what the market wants to do. Okay. So that's what I'm looking at with UJ. Going to CJ, I am in a buy on CJ. Yes, I am in a buy. And CJ and EJ look the same, and I'm looking for the similar to what we got right here. You see, we got the break above and then some type of pullback. We got the pullback. That's what I'm looking at. That's what I'm looking for with UJ. Okay, so I did enter on this trade sometime last week. Almost hit my stop loss, but I still feel very, very confident that we are going to continue to push up on this trade. Yeah, it was damn near about to hit my stop loss, but that's cool. But yeah, so this is the same reason why I'm getting in for I'm looking for a buy on UJ. I'm looking this is the same reason I got in for the CJ, because again, when you just look at it from a macro standpoint, CJ, EJ, and UJ, they all look the same. They're all in the uptrend right now. So yeah, in this buy right now. If you guys are watching this and you guys do trade this, then you know you could possibly even enter right now. To be honest, like this, I could see another entry if you guys go ahead and enter. And again, you could put your stop loss right here, a little bit below, or put it where mine is, and still trade it up to the upside. And this is a nice ass fucking swing. Nice swing. Mine is a 1 to 4. This will be a 1 to 8. And I would enter on this, but I already have 4 trades open right now, and you guys will see. So this is a possible entry, possible level to enter on, if you guys are looking to enter on CJ. EJ, same thing. EJ still again, go to the 3-month, looks the same exact way. Oops. Now, tell you guys, this was gonna be a great video. Back in September and in July, this is during the time when the euro was doing rate hikes. So the fact that we came down and we said these are fundamental support levels. So the fact that we came down and we respected these levels multiple times, it just further support the idea of us going on a continue to go higher, right? So I'm gonna buy here. So I could definitely possibly see another possible entry if you guys want to get in as well. Stop loss here, take profit, boom. Nice little 3-to-1 risk to reward. So this is also a good level to enter on if you guys want to enter on this trade. We was in drawdown for a bit, but then ended up trading higher. And then once we break above here, then I will be confident that it's going to continue to go up. Okay, so fundamentally, I am more bullish on the euro compared to Japan. I am more bullish on Canada compared to Japan. And I am more bullish on the U.S. compared to Japan, even though the U.S., the euro, and Canada have been doing rate cuts this year. Okay? So that's what I'm looking at. These are the trades that I'm in right now. I'm in a buy on gold as well. So I feel like gold is going to make new highs again, hitting 2,700. So what I was looking at for gold was for it to come pull back here and then continue to the upside. Um, uh, and the reason why I am bullish on gold compared to the U.S. is because, again, um, gold is a safe haven. So when you have a country like the U.S. doing rate cuts, foreign investors are going to dump their money into something that, into a place where they know they're going to get pretty much their money is going to be safe. Okay, interest rates is coming down in the U.S. Gold and silver will most likely continue to push up for the rest of the year. The U.S. is still doing rate cuts. They're looking to do two more rate cuts before this year is over, and they're looking to do 25 basis points each cut. So altogether, that would have been a 100 basis point cut within the fourth quarter, ending of third quarter, going into the fourth quarter of the year. And on top of that, we had some geopolitical tensions going on with Israel and stuff, and the war that's going on right now. So when you tie all that in with a bearish dollar, gold is, it's more appealing to foreign investors, and this is exactly why gold has been trending this whole entire year. I wish I would have just swung. You know what I'm saying? This whole year, this would have been a fucking amazing trade. Because if we go back to January of this year. Look at this. Look at what kind of fucking swing that would have been. Like, insanity. Insanity. And you didn't get no drawdown. You didn't get barely no drawdown. What, this little bit, and then it's been up this whole time. It's crazy. I'm gonna get myself to that point for sure. But as far as another entry for gold, don't really see one unless, like, once we break above here, it retests here, and then a continuation. So, but the way gold has been performing this year, shit, it you lucky you get a pullback and a retest. We might just go ahead and just push all the way through to 2,700 and make a new high, surpassing this right here. So if we could get a pullback here, then I'll be looking to enter again. If not, just gonna ride this wave up. And then looking at silver, silver's a little bit more different than gold because gold is making new highs, silver isn't. But silver is still on an uptrend. Silver is looking super nice. When I threw my fib on, my fib on here, it respected off the 50% fib level very beautifully. So I went ahead and entered. You could possibly get in for a buy right now on silver. Stop loss could be here. And then, I mean, it's a 2-to-1 risk to reward. Not too bad. Not too bad. But, with silver, right, when we look at it from a macro standpoint, when we look at it out, we have other historical data to base it on. Because, again, we're not making new highs like gold. So even if you were to enter right now, we still have a possible level for silver to get up to before this year's over, which is $36. So you can go ahead and even swing. You know what I'm saying? Like, you get in for this buy right here. Stop loss could be right here, and then you could swing it all the way up if you want to get to this fib level or even this level, previous level right here. That's a 5-to-1 or 3-to-1 risk to reward. 4-to-1 risk to reward. So as far as silver, I'm waiting for it to clear these old highs. Once we clear it, if we can get a push and then some type of retest back, then a continuation, then I'll look into scale in on this trade. And just like gold, silver is also a safe haven as well. So I trust you guys find a lot of value in this market breakdown. I did say a lot, and this is just, I'm just trying to bring a lot of value to you guys. So if you like what you hear, if you like what you see, please trade responsibly. I am not a financial advisor, so I'm not telling you to pull on your trade. I'm not responsible for you losing money. If you do end up taking my trades, you know what I'm saying? Cool. If you lose, make sure you're risking properly. I do have a free Discord if you want to join, where I break down fundamentals. I break down news articles and fundamentals and data. I break all that down in my Discord. So if you want to join, it is free. And I also give out signals. Like I let you know when I'm getting in. I give you my stop loss, my entry, and my take profit. Okay. So I'll see you guys in the next fun market breakdown. And I trust you guys have a great trading week. Peace.